As far as the September MPC meeting was concerned, I think most observers out there were of the view that there was going to be no change, and that indeed has turned out to be the case. The consensus view as to when we're going to see a rise in interest rates amongst most observers tends to be middle, maybe even end of next year. This is in contrast to what we're seeing in the Federal Reserve in the US, where they're looking now at 2015 at the earliest and maybe even 2016. So that being the case, maybe we'll get caught up in that and moved along, and we may not even be looking at 2014 here anymore. Maybe it's even going to be 2015. All I'm saying is we're looking at a situation where we're at 40-year lows as far as interest rates are concerned in South Africa, and it's probably not going to change materially on the upside in the foreseeable future. However, given the powerless state of the economy, and I use the word powerless advisedly, we're now looking at a situation where we could be looking at less than 2% GDP growth for the whole of this year. And Reserve Bank Governor Marcus, in her speech this afternoon, said the official view from the Reserve Bank is now 2%. Well, here we are in 2% in September with only 3 months to go to the end of the year. It may well be that 2% gets revised down even lower. Putting all of this together suggests to me that we could be in a situation where the authorities, and when I say the authorities I mean the Reserve Bank, may well feel compelled, if the economy really starts sliding into a bit of a backwash here, they may feel compelled to drop interest rates, maybe by only 25 basis points between now and the end of the year. And I know this sounds a little bit cynical, but given the fact that we've got an election coming up in April 2014, that might just be more grist to the mill as far as helping out the poorer sections of the community are concerned. So all other things being equal, wouldn't be looking to see any movement in interest rates for at least the next 18 months, maybe even longer. But if, and the one caveat to that is, if we see a significant slide in the country's fortunes as far as GDP growth is concerned, it may just be that the Reserve Bank feels compelled to make at least a token reduction in interest rates in the interim period.